Watching Masters in Trading Live with Jonathan Rose.
Okay, you're on.
Hey everybody, it's Jonathan Rose and welcome to Masters in Trading Live. You'll see I'm not in my home studio. I had to travel a little bit to Baltimore and in this beautiful office, but I'm excited to talk markets today because markets are spiking. Risk is spiking, uncertainty is spiking. Whenever the markets get this volatile, just think of it's people are uneasy. They don't know where the market's going to go. That's why the market gets killed. That's why the VIX rallies. That's why there gets to be a lot of premium in options. Whenever volatility spikes, I always do the exact same thing, and I'm going to walk you through exactly what that is, what to watch, how to look at the volatility, whether to get nervous or scared, and just how to deal with it. So we're going to go to the slide deck. Telvin, if you could throw me in my slides, we'll go to the slide deck and talk about how to survive these very, very volatile markets. All right, fantastic. I got the chat open. Welcome, everybody. So glad you joined us. So when volatility spikes, that's uncertainty. That's all it is, guys. The market is searching for value. It's searching for answers, okay? What you want to do is you want to find trades that are not correlated to your overall holdings. That's what we're going to talk about right now. Do not catch falling knives. We are not just buying every software company and every Microsoft and Google. We need to prepare for this. So what happened? Well, obviously, U.S., Israel launched joint strikes on Iran. Oil gaps up. Gold spikes. The S&P falls. Natural gas is spiking. The key number to watch out for, and this is what we've been trading, 20% of the world's oil flows through the Strait of Hormuz. 20% of global natural gas flows through the Strait of Hormuz. So when that closes, those are all spiking. Understand that volatility is synonymous with uncertainty. That's all it really is, right? What we look at what we call our vital tool. Our vital tool shares VIX term structure. So 1-day VIX is 16, 9-day 21, 23-day 21, 30-day 21. All of this, look, 24 going all the way out for 6 months. So the market, it's not concerned about what's going to happen in just 9 days. The market is pricing in a much longer term conflict than many, at least in the US, expect. So watch VIX term structure to see what kind of volatility is the market really pricing in. I think we all should be trading commodities right now. Crude is unbelievably strong. You want to be long any companies correlated to crude oil. Metals pulling back. Metals are a really good trade. Natural gas is spiking. 20% of the world's natural gas goes through the Strait of Hormuz. And then we talked about this too, the crack spread as well. Anything energy, oil related, that's where you want to be, but that also keeps you not correlated to your overall portfolio. We like to say when the market's moving like this, when the VIX spikes, everything has a beta of 1. What's beta? Beta, it's just your systematic risk. Systematic risk is literally risk to the entire system. So if a stock has a beta of 1, well, they're going to move overall with the market. If a stock has a beta of 4, when shit hits the fan like right now, that stock with a 4 beta is going to get annihilated. So watch the beta of the overall market. Falling knives, you don't need to get into airlines, into travel, into auto. Where you want to go right now, guys, energy names. Energy names, XOM, CVX, COP. We've been talking about some of the natty gas names, been talking about the refiner names. You could play defense names. What you don't want to do is catch that falling knife. Watch the risk measures. The VIX. The VIX is trading the highest level that it's traded since Liberation Day. Watch your VVIX. VVIX is now trading 120. So here's, let's call it our volatility playbook. First thing you have to do is audit your correlations. If you are long Microsoft and Amazon and Tesla, you don't need to buy QQQs on the pullback, right? That makes no sense. That's the exact same trade. You're just adding onto your risk. If you're looking for new trades, I highly encourage you to look for commodities. It's a great way to spread your risk out. Gold does not care if Nvidia misses. The crack spread, I shared the crack spread with you guys yesterday. It's going vertical. The crack spread shares the profit margin for refiners. You want to be long refiners. Another thing, in this volatility, trade less. Take a step back. Calm down. The market's not going anywhere. Trade less and hold your positions longer. And then finally, it's so hard for people to really understand this. Patience is a position. Let the market unfold. This might get a lot worse before it gets better. This might scare us a lot worse before it gets better. Patience and wait for optimal levels in your trading. What we like to say in our community, protect first, diversify second, and patience is absolutely a position. And finally, I did some research, guys, and so I want you to remember this. Every war-driven sell-off since World War II has been a buying opportunity within 6 months. The median S&P return is about 4% after 6 months, but the first week, that's negative. So do not rush. Patient. Wait for those best levels, and then when they present and the market turns, we're going to see a rally like we haven't seen in quite some time. What I always do, guys, is I get on for these presentations and I do a free portion where we open this up for everybody. After the free portion, we have our all access portion where I get off, I open our Discord community, and we go over some of our active positions. Thanks so much for watching. Make sure to like and subscribe, and we'll be back. We'll be back tomorrow, 11 a.m. Eastern Time. All access. You guys don't go anywhere. We'll be right back.